In today's video, I'm going to be talking about the best swing trading strategy for beginners. And to start things off, I want to do what most beginners will do, which is deposit $500 into a trading account and randomly buy their entire account worth of option contracts. So what I'm going to do now is I'm going to place a order on a random stock. I have no idea what I'm doing. This is just to simulate what most beginners will do. At the end of the video, we're gonna see if I end up losing my entire $500 that I'm putting on this position or if I make money. So I'm gonna send this through right now and stick around until the end to see what happens. And now that we got that out of the way, that is what most beginners do. They will make decisions without being educated, without looking at a chart, without understanding the basics and core fundamentals of the market and what a marketplace even is. Now, I've been trading for 7 years, and today I want to give you a step-by-step process and show you a very simple yet very effective swing trading strategy, which is going to require no more than 15 to 30 minutes of your time each day. And so by the end of this video, hopefully you will learn the exact strategy and be able to apply it yourself in your trading account. Now, the first thing you're going to want to do is you're going to pull up a chart. That's right. We're actually going to be using technical analysis to identify, well, what stock we want to trade and what direction we want to bet on it going. And then later on, actually figuring out where are we right and where are we wrong. And I'm not just going to give you this step-by-step process to find these stocks to trade, but I'm going to give you custom tools that I've built over the last several years trading that are going to help you and bring this whole system together to, at the end of the day, yield those consistent profits that we're looking for. Now let's pull up a stock. Let's say Tesla we'll use as an example. Currently, I'm looking at a 4-hour time frame. You can see here, each candle represents 4 hours. Now, as swing traders, we want to look at a larger time frame, that being 4 hours. If you're day trading, you're going to be looking at a 1 minute, 5 minute, or 15 minute. With swing trading, typically you're going to be looking at a 4-hour, 1 day, or a weekly chart. Because of the way I like to trade, a 4-hour is going to allow me to spend obviously the time that we're going to need to find, identify, and place that trade. And then we're going to sit back. We're going to let that trade play out over the course of 3 to 5 days. Throughout that time, we're just going to be enjoying our life, not having to do any work and letting that trade play out. So that horizon of time per se, I prefer with a 4-hour, whereas a weekly, you're going to be looking for really large movements on a weekly chart where you're just going to be sitting back over the course of weeks. But for me, I find the 4-hour to give me enough opportunities. So once you have that 4-hour time frame pulled up, you're going to want to add what are called moving averages to your chart. If you're on Thinkorswim, you're going to add them under studies. And on another platform, you're going to be able to identify where to add these. And once you have, you're going to apply 2 what are called simple moving averages. So 2 SMAs, and you're going to apply 1 EMA, which stands for exponential moving average. Now, we're going to select certain lengths for each moving average. One of the SMAs is going to be the 50 length, which also means 50 days, because that 50 SMA and the following SMA and EMA we're going to add are going to let us see the average price movement of that stock on that selected time frame. We're looking at a 4-hour, and we're also looking back over the last 180 days. Next, we're going to add a 180-day SMA, and you can make these whatever color you want. I'm going to make mine green, and then our last moving average is going to be an EMA, which I like to leave default. Blue. So we're going to hit OK. We're going to apply these. And now you can see we've got our 3 moving averages applied on this chart. Now, what we're going to do is using these moving averages, we're going to, what I like to say, use them as reference points to decide if that stock we're looking at is a stock we want to trade. And then based off of where those moving averages are trading in association to the candlesticks, we're going to then decide where we're right and where we're wrong. Now you could pull up the S&P 500, NASDAQ 100, maybe the Russell 1000. The idea is that we are going to be visually scanning and looking through charts. We're going to be looking for a couple very specific things. Now I'm going to pull up my checklist. You can also download this checklist linked in the description below. This is what I like to call my ATH pullback or my all-time high pullback setup. That is the strategy that you're going to be learning in this video. Now we're going to have specific defined entry criteria and trade management. Entry criteria, when we're looking through these charts visually, what we want to see is that we can check off preferably all of these boxes. Now I'm going to start by looking through the S&P 500, and we are going to be visually looking for a chart that has just or recently formed an all-time high. Okay, you can see how it says high at 446. We want to see a chart that is sitting at all-time highs. Okay, there we go. It looks like Amazon is sitting very close to all-time highs. And as a rule of thumb, the cleaner and the clearer the chart we can find, the better. I like to say the more respected a chart is, the better. When we look at these moving averages, when we look at these lines, we want to see that these 4-hour candles are not trading in the middle of a line. Now that is going to tell us that that moving average is respected. And based off of where the candlesticks are trading, whether they are trading above or below that moving average, well, we're going to use those moving averages as reference points of support and resistance. So I'm not a huge fan. Amazon looks a little choppy. Let's keep looking. And I wanted to mention this strategy is pertaining to individual stocks, not ETFs as a whole. So I'm not going to actually be trading like this, looking at, say, SPY, but I'm looking through the S&P 500 to find individual stocks to trade. All right, I'm liking this stock. Ticker symbol C, you can see has just formed all-time highs today. Check number one. We want to make sure that the overall trend is bullish. That is our first entry criteria, which means the stock is moving from the bottom left to top right. So check. Nextly, we want to see that that stock is sitting at or slightly below all-time highs, which it is sitting at all-time highs. And preferably, we'd like to see that all-time high has just been formed, which it just has been formed today. If we look at a 1 minute, we can see that all-time high was formed about 20 minutes ago. And next, we want to see that the 15-day EMA is respected. That is that blue line there. We want to look back over the last 15 days. If you count the black bars, each representing a day, we could see that we have actually been able to stay and hold above the 15-day EMA. Yes, we've seen pullbacks, slight retracements, but remounts of that level. The market loves to do this. It loves to retrace, probe an area, remount, and essentially what happens is traders who have their stop loss set at this level, well, they're going to get shaken out of the trade. The market is going to take their money, they're going to lose, and then us educated traders, well, we aren't going to set our stop loss on the 15-day. We are actually still going to be in the trade. So this happens time and time again. You'll see, but overall, looking at the trend, we have remained and been able to hold above and continue trading above the 15-day EMA, making that level respected. So that is a check on our fourth box. Next, we want to see the 15-day EMA is currently respected. In this case, the 15-day EMA is not respected. Like I said, preferably we want to see all of these boxes are able to be checked, but in this instance, we can't check that the 15-day EMA is currently respected. That means that we're going to have a little less certainty, not 100%. Nothing's ever 100%, but the more boxes we can check, we're going to have increased certainty when it comes to actually taking that trade and the probability of that trade actually playing out in our favor. So let's go through another example and try to find a chart where all of our boxes as far as the entry criteria are checked. So again, when we're scanning, we want to look for a visually very clean chart. We don't want to see a lot of chop, which means a lot of volatility, which means that moving averages are more than likely not going to be respected. So again, we want to be able to check off all of the boxes on our entry criteria checklist. And in the past, I've spent a lot of time actually going through these different sectors and looking for charts. Now, this can be done after hours. This doesn't need to be done during active market hours. I send out a pre-market watch list every morning to the team over inside my mentorship group, covering 3 to 4 stocks that I'm going to be eyeing on the day pertaining to one or all 3 of the setups that I trade. So the ATH pullback is just one of the 3 setups that I trade and I teach my students. So here's another example. This one looks actually pretty good. Ticker symbol LLY. We can see the overall trend is bullish, check. Sitting at or slightly below all-time highs, check. All-time high just formed, check. Right, 15-day EMA is currently respected. I could say check, right? Because overall, look at that. Very strong momentum. Yes, slight retracements below, but remounts. Okay, 50-day SMA is also respected. So we've got very clean, clear price movement here where the 50-day and 15-day are respected. That looks like we've just checked off all of our entry criteria. Now let's look into LLY even further. Now, when it comes to the ATH pullback, there are 4 different ways we can go about trading this setup. Under trade management, we can either trade a break below the 15 and short to the 50, short off all-time highs down to the 15, short off all-time highs down to the 50, or break below the 15 and 50 and short to support. And how do we decide which option is best? Well, we want to look at historical data. Now, I've actually built a tool that is going to give us this data and help us make an educated decision. So if I go up to edit studies, I am going to look for the Daily Traders ADR calculator. Now, you can also apply this tool to your Thinkorswim platform. I'll link it in the description below. If you hit add selected, and then you're going to actually move this up. Okay, we want to see that this Daily Traders ADR calculator is at the top. You're gonna hit apply, and then you're gonna go back to the gear icon, and you're gonna uncheck the left axis, hit OK, hit apply, and there we go. We can see here up on the left, and again, make sure you're looking on the 4-hour time frame over the last 180 days. This is the only way this is going to be accurate and work. We can see the average daily range on ticker symbol LLY is 0.88%. So on average per day, LLY moves not even a percent. Now, why do I look at a 3-day projected movement? Because my average hold period when looking at my trades, winners and losers, doesn't matter, all of my trades combined, on average, I'm holding my trades 3 days. And you're actually gonna be able to change that projection based off of your average hold period of your trades. And you do that by going to the gear icon and changing the user defined day. So we could look at 5, we could look at 10, I'm gonna look at 3. And we can see here that the 3-day projected move is 2.65%. Now, what we're gonna do is we're gonna go to drawing tools, and we are going to use this trend line tool, and we're actually going to figure out how far we are sitting off of each moving average. We're going to chart the percentage that we are currently trading away from first the 15-day. Okay, so if we line this up, click and drag up to our all-time high there, okay, just about 945. Well, we can see we're sitting 2%, or the 15-day EMA is sitting 2% off of all-time highs. And then we can look at the 50-day. Well, the 50-day is sitting about 4% off of all-time highs. Okay, so let's look back at our trade management. Okay, we can play a break below the 15 and short to the 50. So we would short through the 15, take profit at the 50. We could short off that all-time high down to the 15. So that would be our margin for profit. Take profit would be here. We could short off the all-time high and down to the 50. So there's a couple options. We are gonna look at that projected move, and we're gonna say, hey, 3-day projected movement is 2.65%. Now the 15-day EMA is sitting about 2% away from where we're currently trading. Now we ask ourselves, is that a realistic move to happen within the next 3 days? And the answer is yes, because we are sitting 2% away from the 15-day EMA, or that would be our target, our take profit. And we can see that the 3-day projected move is 2.65%. So we are within that 3-day projected move. Now, if we look at the 50-day, well, we're sitting 4% away from the 50-day, which is outside of that 3-day projected move. So we could say reasonably well, we actually won't be able to hit that 50-day SMA as our target, as our take profit in the next 3 days. So that means we're gonna go with the second option as far as trade management. We're gonna short off the all-time high down to the 15. So we're gonna go ahead, draw out our take profit, which we're gonna set right on that 15-day EMA. So that would be our take profit. And next we have to decide, where are we wrong? When are we actually getting out of this trade? And what we're gonna do is we're gonna look at the average daily range over the last 180 days, which is 0.88%. We're gonna go back, we're gonna draw our trend line. So what we're gonna do is we're gonna click at that all-time high. We're gonna drag up until we are at 0.88, right around there, roughly. Okay, we can drop that, and we can see, and then we can drop a level here and set that to red. And now we can see here is our stop loss. So to recap, we're gonna use the 3-day projected movement, or you're gonna customize the projected move based off your average hold period for all your trades combined. And that is gonna tell us what trade management we'd like to go with for this setup. And then where we're wrong is gonna be defined by the average daily range over the last 180 days, which on this stock was 0.88. And then we're gonna chart up 0.88% off that all-time high and draw a line there, which is gonna signify our stop loss. Now we've identified what stock to trade, what direction to bet on that stock going, and where we're right and where we're wrong. Now comes the more difficult part. We actually have to decide what option contracts to buy and how much capital do we allocate to this trade based off of the risk presented. And to do that, we're going to use another custom tool that I built over the last 1.5 years, which is called a risk management calculator. This is going to tell us how much capital we're going to allocate into this position, taking into account our historical data and the risk presented with this trade. This is a bit more complex and it would take the next hour to actually explain, but what I'm gonna do is link my mentorship group in the description below. You can click that link, you can learn more about what is included, and you can apply to work with myself if you'd like to do so. If this is how you'd like to trade, then you are more than welcome to click that link in the description below. And I actually just want to show you some incredible results from the hundreds of students that have effectively been trading this strategy inside my mentorship group. And we just had Casper coming in today with an incredible 800% gain, equivalent to $300 profit. We had Andrew coming in with 437% gains. And I think you're starting to get the point how this is a very simple yet effective trading strategy. Now, let's check in on my trade and see if I ended up making or losing money. All right, so I'm gonna open my broker and we are gonna search NVIDIA and let's see what happened. Oh, it looks like we are down, not bad, okay? We only are down 2% or $9. And it looks like we're almost flat now. Okay, so let's go ahead. Let's close this out before I lose any money and send this through. And we lost $2. And that is what happens with most beginners. They open an account, deposit money, gamble, and end up losing inevitably because they're not properly educated. Now, if you'd like the second piece of the puzzle, if you'd like to learn everything that I do myself to trade, again, click the link in the description below to my mentorship group. I hope you guys enjoyed this video. Subscribe for more, and I will see you in the next one.